In this lecture, we will learn about Lehman Brothers. Lehman Brothers was one of the biggest investment banks in the Wall Street. So Lehman Brothers Holdings, saying that it was the fourth largest banks in US, initiated the largest bankruptcy, that is Chapter 11 protection proceedings in US history on September 15, 2008. So question is, what went wrong? What went wrong with Lehman Brothers? So since 1999, Wall Street became the new Wild West of the financial world. Why this happened? Because in 1999, the Glass-Steagall Act was repealed that had prohibited affiliations between commercial banks and investment banks and their activities. So Glass-Steagall Act was an act which was passed during the Great Depression of the 1930s, because one of the problems with banks was that they were taking those deposits and they were engaging in high risk investments, which often involve buying stocks. As a result, it was made illegal for banks to engage in high risk investment with their clients' deposits. However, Glass-Steagall Act was repealed in 1999, which made Wall Street a very interesting place to work, because now the Wall Street, using depositors' money, can now engage in very risky investment activities. So what Lehman Brothers looked like before the collapse? So they aggressively pursued opportunities in proprietary trading, trading with its own money to make profit for itself rather than for its clients, derivatives, securitization, asset management, and real estate. So these are all possible since the repeal of the Glass-Steagall Act. As a result, what happens? Share of firm's total revenue from proprietary trading increased from 14% in 2000 to 21% in 2006, which is great for the shareholders in Lehman Brothers, right? Because bank was bringing in huge increase on the returns on their investments. Revenue growth of 130% between 2002 and 2006. Revenue grew by 130% within a period of 6 years. And as a result, market capitalization appreciated by 340%. That means shareholders were super happy because the value of their investment or value of their asset increased. That's what you want as a shareholder in Lehman Brothers. Just to get an idea about how much was the increase in share prices. So these are the share prices of Lehman Brothers starting in 1994, which was trading around $5. At the height in 2007, it increased up to close to $90. That's a huge increase, especially the increase since 2001. It all was possible because of the repeal of the Glass-Steagall Act. What Lehman did, they turned themselves into a mortgage company. How they did that? After 1999, securitization became an increasingly profitable business as a result of rising home prices. And if you remember, what is securitization? You issue mortgages, you take those mortgages, put it together, slice and dice it into different pieces and sell it to somebody else. And since those mortgages were backed by home prices, as home prices were increasing, the value of those assets were also increasing. And since home prices are increasing since 2001, so this became an extremely valuable or profitable opportunity for Lehman Brothers. To capture the securitization market, Lehman acquired BNC Mortgage and 4 other mortgage lenders from 2003 to 2004. So they started buying mortgage companies. By 2007, Lehman was a leading underwriter of and market maker in residential and commercial mortgage-backed securities. That means they became a mortgage company essentially, because that was highly profitable for their clients or investors. In 2006, they started a new strategy, which is, mind you, 2006 is the time when it was just before the bubble burst, which happened in 2007. They became from securitization to real estate owner. So what they did, the firm aggressively bought real estate related assets throughout 2006 and by mid 2007. Lehman held significant position in commercial real estate. Mind you, what they are trying to do, they're trying to just buy up the properties, buy up buildings because value of those assets were increasing because of increasing home and real estate prices. By 2007, Lehman Brothers held $111 billion in commercial or residential real estate related assets and securities, more than double the 52 billion that it held in 2006. Think about the exposure. Within a 1 year, they more than doubled their exposure to actual real estates. So they literally started owning a lot of buildings, a lot of homes uh, in their portfolio. How all these things were done? It was done through leverage. And if you remember what is leverage, it's debt over shareholders' equity. And how much was the increase in leverage? It increased from 24 times in 2004 to 31 times in 2007. That means each dollar from the shareholders, Lehman Brothers has $24 in borrowing in 2004, which increased to $31 in 2007, which is a huge increase in leverage. That means their capital was extremely small. And if you remember, total assets is equal to total liabilities plus capital. And capital is nothing but shareholders' portion. And shareholder doesn't like to have too much capital because that reduces their dividends, because then total profits needs to be shared among the larger number of people. So banks love to go into huge leverages because that works for their shareholders. Now the crisis started happening. Okay, by 2007, home prices start weakening. Now when home started start weakening, what happened? Rating agencies and analysts began demanding that investment bank reduce their leverage. Now there's a huge pressure on the Lehman Brothers to reduce their leverage. That to reduce leverage, firms have two choices: to increase equity or to sell assets. Now think about, when home prices are declining, who is going to buy stocks in Lehman? Everybody knew it's a problem. So they had to sell assets. In January 2008, Lehman instituted deleveraging strategy to reduce its real estate position. They started selling the real estates they were holding. However, Lehman was unsuccessful at selling such assets at an acceptable prices because they bought all those homes at the height of the housing bubble. So they bought those assets at an extremely high price, and obviously when home prices started declining, they couldn't sell it because nobody was willing to pay the premium price they wanted to have. This leads to a liquidity problem. So Lehman borrowed billions of dollars each day in the overnight wholesale funding market in order to operate. That's the federal funds market. By early 2008, other institutions were less likely to accept Lehman securities as collateral. They said Lehman is too risky. They are not going to lend that money that Lehman needs to carry out their day-to-day operations. As Lehman's perceived financial position worsened, it faced a higher cost of credit. Obviously, people who are willing to lend to Lehman, they started charging a higher interest rate. And finally, unable to finance its long-term debt using short-term instruments, ultimately led to the demise of Lehman. That means Lehman simply didn't have the liquidity or the cash flow to carry out his business, though they were just frozen in time. As a result, what happened? The Lehman failed. Mind you, a bank fails when they are unable to meet the obligations they have, which is towards their investors or depositors. This graph shows the leverage ratios for major investment banks, and this blue one is your Lehman Brothers, and you can see how the leverage has gone up. And mind you, Second highest leverage was the Bear Stearns, another bank which also failed. Then the Merrill Lynch was in bad shape. Look at Goldman Sachs. They were kind of like, I think something happened. They were able to control their exposure or leverage. And Morgan Stanley. These are big investment banks who were highly leveraged in 2007. So here's the final overview. So what happened late 1990s and into early 2000s, world experienced a slave savings glut, which means because of various factors, there was a lot of cheap money floating around. Okay, and all this cheap money came to the United States in different ways because of dot-com bubble, because of growth in some of the Asian economies, also the oil-rich countries like Middle East. All this money flowed to US because US was a safe haven. It's a good place for investors. Many of those monies were invested in homes, so US housing boom provided easy destination for the excess savings from the rest of the world. This led to the creation of new financial instruments such as MBS or mortgage-backed securities or CDOs or collateralized debt obligations. These are nothing but any kind of assets which are backed by some other assets or income generating assets which kind of put together, slice and dice it and send it to or sell it to somebody else. High returns on these instruments encourage banks to enter more riskier avenues such as subprime mortgage because many banks were not keeping these mortgages in their balance sheet because they sold it to somebody else like pension funds and investment banks. Finally, by 2007, home prices started fall. That led to the full-fledged financial crisis because banks had a huge problem with their cash flows. They simply didn't have enough cash flows to carry out their businesses.